Hey, I'm Jusko from ProudMoney.com, and in this video we are going to talk about credit cards versus debit cards and which one is better if one is better. But first I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So this is a pretty foundational topic in personal finance, and for whatever reason in the hundreds of videos I've done, I have never covered it as a standalone video. So we are going to correct that right here. Now, if you're a long-time subscriber, you probably know that I mostly talk about credit cards, and they are my personal preference when it comes to this matchup. However, that does not necessarily mean that credit cards are the better option for everyone. There are instances where debit cards are probably the better way to go. So in this video, we are going to talk about the pros and cons of credit cards and debit cards and talk about when one is better for a certain type of person and when the other is better for a different type of person. Now at the core, there is one major difference between debit cards and credit cards. On the debit card side, when you make a purchase, the money immediately goes out of your account, whether that is a bank account attached to the card or it is a prepaid debit card that you have loaded money onto. You make the purchase, the money goes out, and your balance has gone down. In this way, you can only spend what you actually have in your account. It is essentially the same as cash, just a different mechanism. When you have hit zero, you can't make any more purchases unless maybe you have overdraft protection, but that's sort of out of the bounds of what we're talking about. You get to zero, you can't make any more purchases, and that restricts you from going into debt. With credit cards, on the other hand, you can go into debt. With credit cards, you are not paying immediately. Instead, you are taking out a loan from the credit card company, and in about a month or so, the credit card company is going to ask you to pay off all of those purchases you made with the card. Almost all credit cards have a grace period, meaning as long as you pay for everything that you bought with the credit card by the due date, you are not going to get charged any interest, and it will essentially have been a free loan. However, you can also choose to make a partial payment of whatever you owe and revolve the rest of the balance to the next month. When you do that, you are going to get charged interest, and you're going to get charged interest at a fairly high rate with credit cards. And if you do this repeatedly over time, you could dig yourself into debt to a place where you owe more on your credit cards than you actually have in your bank accounts. So that is the big difference. Debit cards have a built-in debt stopper. You can't go below zero. With credit cards, you can go below zero. You could go way below zero. When I frame it like that, it looks like debit cards are the clear winner. However, that is not necessarily the case. So let's do a little pros and cons of debit cards versus credit cards so we can get a little more balanced picture, and you can see where debit cards maybe fall down a little bit and where credit cards can shine. All right, so let's actually start with credit cards, since at first blush they look like the worst of the two, and the big con with them, like I've already said, is the fact that you could go into debt, and you could do so at a high interest rate. Credit cards at the best are going to be a 15% interest rate. Oftentimes they're going to be over a 20% interest rate, sometimes even over a 25% interest rate, which is very high. Looking at the pros, however, you could also think of credit cards as a free loan. You get to make purchases with the card, and you get a good long time until you actually have to pay them back. And if you pay them back in full, you are not going to have to pay any extra. It was a free loan. It was convenient, no charge. Now, another big pro for credit cards is that they have a lot of safeguards built into them. When you make purchases with a credit card, you are not using your own money. So if your card is lost or it is stolen, the purchases that have been made with the bank's money. So you can call the bank and say, hey, something happened to my card, and they are going to close down your card, and at most they could charge you $50 for the fact if there were any fraudulent purchases, but for the most part, they're not going to charge you anything. So you aren't going to pay for the fact that your card gets lost or stolen in almost all cases. Even more so, the bank has incentive to look for fraud, to scan all the purchases that all of its cardholders are making to make sure that they are making purchases that sort of fit the trend. And if a red flag comes up, well, then they can stop the account. They can either contact you and say, hey, did you make this purchase? Or they could just immediately shut the card down because it's their money. It's not your money. They may be sending you a bill later on, but as of that point, it is their money. So all of the risk is really on them when you are making those purchases. So if something bad happens, it's not coming straight out of your bank account, it's coming out of their bank account. Another safeguard from credit cards is the fact that credit card companies can serve as your advocate between you and merchants that you might have a problem with when you purchase with credit cards. So if you buy something online, for example, it doesn't show up, it shows up broken, or you pay for a service that is not rendered and you used your credit card, the merchant won't give you your money back, you go to your credit card company and you can dispute the transaction. In most cases, the credit card company is going to take your side unless the merchant has a very good reason on their end that they did not give you what you should have expected. In most cases, you're going to get your money back, and then the credit card company is going to go after the merchant, and the merchant has some incentive to play nice with the credit card company, because if there are too many complaints against the merchant, they can lose their ability to accept credit cards in the first place. So there's a nice system in place that sort of keeps you whole as a buyer, and it gives the credit card company some power over the merchants to make sure that everyone is getting paid who should get paid and not get paid who shouldn't get paid. Another pro with credit cards is that they can help you build your credit history. So if you make your payments on time, especially over a long period of time, then you're going to build a good credit track record. And when you go after other loans, auto loans, mortgages, other things of that nature, not only are you going to get approved, but you're going to get low interest rates in comparison to people that don't have credit histories, who might not get approved at all, or if they do, would have higher interest rates. Now, if you haven't made your payments on time over a period, well, then this could become a con, because then you will look bad in terms of your track record, and then you won't get approved for those other things. But if you do it right, you can build a credit history that is going to help you and save you a lot of money over the long haul. And then the final pro with credit cards is that so many of them offer rewards and other benefits to card holders. So for example, if they have a cashback card and it gives you 2% cash back, you could think of that as essentially being a 2% discount on all the purchases you make with that card. You might also have benefits like extended manufacturer's warranties that go beyond the initial manufacturer's warranty, cell phone insurance, travel insurances, a lot of different things potentially depending on the credit card. And many of those credit cards are going to have no annual fees, so you're not paying anything. As long as you're paying every month, you're paying no interest, but you're still getting the goodies. All right, now let's talk about debit cards. We've already talked about the big pro, which is that you cannot spend more than you have. You can't go below zero. You cannot go into debt with a debit card, but they do have some cons when compared to credit cards. One of them is around safeguards. If you have a debit card and it gets lost, it gets stolen, and somebody else uses it, well, they could potentially drain your bank account with that debit card, and then you have to go back to the bank and try and see if you can get your money back. But it's your money. It's out of your account. It's not the bank's money like it would be with a credit card. So usually you're going to be able to get your money back, but there may be a lag. Maybe you need that money for other things, other bills that you have to pay, and until the bank has done their investigation, you may not have it. Depends on the bank in terms of how they run that. But even beyond that, banks have less incentive to really look out for you with a debit card than they do with a credit card, because if there's fraud on your account, again, it's your money versus their money. Or if a merchant does not come through with the goods or services that were promised when a payment was made, it is your money again. It is not the bank's money. That doesn't mean they won't help you necessarily, but they don't have the same incentive to help you because you are not getting a loan from them. You're just using your own money, essentially like cash. Another con with debit cards is that they do not help you build your credit history. Debit cards, again, essentially like cash. You're not taking any risk. You're not taking out a loan and paying it back like you are with credit cards. There are some debit cards on the market these days that have sort of come up with newfangled ways to sort of act a little bit like a credit card and report to the credit bureaus. But for the most part with a debit card, you are not getting that credit history that you would from a credit card. And then the final con with debit cards is going to be that they are going to offer fewer rewards and extra benefits, if anything at all. Without going too far into how merchant transactions work, banks make less money when you use debit cards, so there is less money to share with you. So you do not get as much back from rewards and benefits from a debit card as you would with a credit card. All right, so that should even things out a little bit. Now that we've gone through that, which is better, credit cards or debit cards? You probably already know that the answer is going to be, it depends. Your number one priority should be to stay out of debt. So if you are someone that cannot deal with the temptation of a credit card and you know that you are probably going to spend more than you would otherwise, and you're going to have a hard time paying it back every month, knowing that you don't necessarily have to pay all that money back and you can just push it down the road and push it down the road, and you would be inclined to do that, well then maybe you should not cannot get a credit card. If you know this about yourself, there's no shame in saying, I don't think I can handle a credit card. I used to not be able to handle Angry Birds on my phone or Words with Friends. I had to take them off. Sometimes there are just temptations that we cannot deal with and we have to keep them out of our lives. So if you can't handle a credit card and you know this about yourself, well, there's no shame in just saying, I can't deal with it. I got to stick to debit because that is the thing that is best for me. On the other hand, if you know that you can handle credit cards, you can make those payments each month and you're not going to buy a whole bunch of stuff that you wouldn't buy otherwise, and you can just sort of reap the rewards without the downside, well, then there's certainly no reason to choose debit cards over credit cards, because the credit cards are going to give you an awful lot of stuff that the debit cards are not going to give you, as long as you can use them responsibly. And then, of course, the right answer for some people is going to change over time. I know one guy, when he was 20 or 21, got his first credit card and built up a sizable balance paying for essential items that were not very essential, and ended up having to pay a lot of interest over time because of it. I never ruined my credit because I made my minimum payments, but I ended up paying a lot of interest. So I should have started with debit and worked my way up to credit cards. It all depends on the individual. Now, if you are someone that is already ready for credit cards, you already have some credit cards, but maybe you need a better one, why don't you check out our video of the best credit cards.